Good afternoon, everyone. My name is Kiersten Hafer, Vice President of Business Intelligence and Innovation at the National Pork Board. NPB is a producer-led organization that seeks collaboration with industry experts to distribute information to help pig farmers with various business objectives. Today, we will cover innovation and what it means for the pork industry. I will share the strategy of enabling growth plus creating growth so that pork can be more relevant to more Americans. Dr. Lee Schulz, Chief Economist at Ever.Ag, will share insights into the Hogs and Pigs Report released yesterday, and Glynn Tonsor with Kansas State University will finish our discussion further talking about demand. Before we begin, I will review our antitrust statement. All the work at the National Pork Board complies with the Sherman Act. The best rule is if you have any questions whether a certain matter can be discussed, clear it with an attorney. I will give all of you a few seconds to review the statement. This is our National Pork Board disclaimer. Pork checkoff funds are being used to host this webinar with the purpose of helping pork producers understand publicly available information. The views expressed by the guest speakers are theirs and not those of the National Pork Board. This week, we had the opportunity to bring a group of industry leaders together to talk about the future of pork and innovation. The Innovation Summit was sponsored by United Soybean Board, and Lee, Glynn, and I were there helping navigate the world of innovation, and we're going to share a little bit about the conversation that happened among those industry leaders. As we think about the pork category, we want and need consumers to eat more pork more often. It's an absolute must for us to maintain long-term demand generation. As we think about that, we need to think about what the strategy for growth should look like. And as we talk about innovation, there's two ways to achieve that growth strategy. One is to enable growth, and that really relates to continuous improvement and the evolution of our category and the products that we represent as part of our product portfolio. There's also the opportunity to create growth, and that is identifying new paths forward for pork and the products that make up our product portfolio. Together, those two things really drive to increasing relevance for pork as a protein among consumers. We've been working a lot over the last several years to drive consumer demand, and that really is enabling growth. This chart here has a lot on the page, but I'm going to break down that we've answered the critical business questions that are related to enabling growth. We've identified what's at risk as it relates to consumption today and into the future, what action we have to take, where to play and how to win with pork, where we can create an ownable position for pork as a brand, as a category, and for our products. We have identified where and how pork is part of the conversation and really how to meet consumers where they are. That has all come together in a way that we've been able to now create the conversation, the awareness, and the consideration for pork among consumers. We've got one voice for the industry, and pork is a category, and it's helping us to stabilize consumption and allowing us to then think about creating growth with new consumers or getting existing consumers deeper into our product portfolio. We really want to move from a consumer demand discussion to consumers demanding pork, and innovation is a critical component to that. It'll help us to maintain and sustain growth into the future. It'll help us achieve a rational loyalty for some of our products, and it'll help us move from special occasion to everyday consumption, which will enable more volume, more growth potential, and potentially more margins. You all know that we return to consumer advertising and marketing in a big way with Taste What Pork Can Do. That campaign is helping us in the enable growth column of innovation and in consumer demand. Without those investments, without creating awareness and consideration for pork, we would not be able to be here and be with the industry leaders this week talking about how we think about innovation playing a critical role in our growth strategy. When we break down the importance of promotion, we think about the 7 P's of marketing. So we have the physical evidence, which is our pork pick, the blue pork pick as we call it, and that's our physical evidence. It's our brand, and the Taste What Pork Can Do logo lockup is going to deliver for pork a very consistent position, an ownable position for pork. We're doing a lot, as I mentioned, with the return to consumer marketing, and that's the promotion. That's us being in front of consumers and maintaining pork as a top of mind option when they're looking for protein. Our investments in segmentation over the last number of years has helped us really understand the people that we need to reach. And we understand through all of the data that we buy from providers in the industry exactly where and how pork is moving through retail and food service. It allows us to identify the places we need to make sure pork is showing up and accessible to consumers. We've identified the process and the way to bring the industry along, who's closest to the consumer, how we work with packer, processors, brands, retailers, food service operators, and states to consistently deliver a unified message for pork in terms of pork having great taste and flavor, it being convenient, nutritious, and also very versatile. The one thing we haven't focused on up to this point has been product. So as we think about carcass utilization, as we think about our product portfolio, it becomes really important for us to think about the elements of the product and the assortment that we offer, and that's where innovation plays a critical role. So why is National Pork Board focused on innovation? We're focused there because it can be a strategic asset for the organization and for the industry. We are bringing relevance to pork and shifting consumers to demanding pork with the recent campaign and marketing efforts. We can't impact supply, but we can impact demand. And innovation allows us to start doing that to help us improve carcass utilization and the valuation. And it also allows us to be prepared for what's coming at us, the things that we can't control, things like consumer behavior or shifts in demand, the things like animal health as we increase animal welfare. We'll have a lot more pork moving through our value chain, and innovation is an opportunity for us to think about where and how to deliver that pork to consumers. It's part of our disappearance plan. We can only grow so far with our current portfolio and increasing consumption within our current portfolio. You've heard us say many times younger Americans are eating less pork and they're eating it less frequently. As we think about that and we think about the carcass utilization component of that, we know that 50% of the carcass is underdeveloped, underutilized, and undervalued. So when we think about these two things, it becomes an opportunity for us to really start the innovation conversation. So when we start thinking about product, we know it's time to address things that fall into product. Quality must be a part of that equation and will be addressed as part of the innovation strategy and discussion among industry stakeholders. And historically, we've been an industry that's been operations driven. It's time for us to be consumer led throughout all parts of demand generation. So as we think about the role of innovation in discussions and our growth strategy, we will start to encompass and think about what's important to consumers as they're choosing proteins and meat items. We have a very compelling reason for consumers to want our product and to take action. It's because they're hungry. What we're missing, though, is usability, the ability to take action quickly with pork. If the trigger's hunger, pork is certainly a solution and an option for consumers, but it's a bit of a delayed gratification because they have to decide how to cook it or where to buy it or how to serve it. So as we think about innovation, we want to think about usability, and we want to think about how we can work through product and innovation discussions that help us get to motivation and habits and an opportunity to put pork within reach. So let's start reimagining that now as part of our innovation discussion. And let's think about the fact that we have to solve for the consumer. Historically, we've put the burden on the consumer in helping them understand what to make and how to cook it is definitely an opportunity for pork to show up differently. And the innovation conversation, riding the coattails of Taste What Pork Can Do and bringing that through to product, is a huge opportunity for the industry. So with that, I'm going to hand it over to Glynn, and he's going to talk through how innovation can improve industry viability. Thanks, Glynn.
Oh, thank you. Appreciate you kicking us off, and thanks for those that are with us live and watching this in the future. As noted, we were just at this innovation summit. Lee and I had the privilege of giving a joint talk, and we shared some of our views from an economics lens of how we think about the place for innovation in the industry, and specifically how we think it could help industry economic viability, producer returns. And we're going to touch on a few of those things here in the next few slides. I want to start with this point. As some of you know, I grew up on a hog farm in Missouri, and I come with a fair amount of, multi-decade context on the pork demand situation. And I think it's fair to say that we need to focus on growing the economic pie and grow some of our focus on consumer demand pull rather than solely, for the most part, supply side efficiencies. Nobody should apologize for supply side efficiencies, and we're going to break that down. But a lot of the work going forward, if you want to actually accomplish some of the goals that were talked about at the Innovation Summit and before, is an economic focus on having to grow the pie. I also want to highlight that the pork board has been engaged in lots of different efforts over the last few years that sort of ladder up to this. So Kiersten highlighted how the timing of this is good with the new campaign and so forth. But even before that, we had this value at stake work. And again, Kiersten alluded to some generational differences. That was a core part of that. Sitting here today, younger generations present a bit of a risk to the pork category if there's not some innovation and change in response to those demand signals. I'm interjecting that to just give some assurance to outsiders and stakeholders that the pork board's efforts are laddering up to this. And it's sort of my job to connect the dots and share some economic insights on that. But I think the biggest risk maybe to think about is the risk of doing nothing. And I encourage us to have an eye towards growing the size of the pie, the total demand pie for pork, think of it that way, and then figure out some more narrow within industry issues later. So there's several pieces of research that Lee and I shared, and we're obviously not going to touch on all those today in our webinar. But our colleague, Jason Lusk, who's now the dean at Oklahoma State, has contributed to this in various ways. And there's others examples we could share, but this is a link you can pull it up later. So some work that's over a decade old of Jason's, but the point would hold actually more today is the pork industry has made massive improvements, largely on the supply side efficiency. And a simple example here would be is the number of sows we have relative to the amount of pork we're producing. We're getting a lot more pounds of edible, consumer-ready pork per female in the system today than we were even when this chart ended in 2012, much less if you go all the way back to the 1970s. And I want to emphasize, nobody should apologize for this. Quite frankly, they should take some pride in it because there's lots of efficiencies and benefits from that. But most of this was a supply side, production oriented, think improving average daily gain and mortality and so forth. Those are all great and we should continue to pursue them, but they aren't informed by the consumer on the pork demand front. And therefore they're probably not sufficient going forward. And one of the ways to think about this is it's hard to push a rope. And that might sound like a silly comment, but I'm going to impose it on you here, is most of those enhancements within the industry in the last, say, 3 or 4 decades have been supply side that ultimately result in pushing more pounds on the market in a more efficient way. And in a commodity market, there are a lot of economic benefits to that. And there's been economic gains throughout our industry over time. Again, nobody should apologize for that. But it's a very different story when you start talking about pork demand. And we need to listen to consumers, potential consumers that aren't current consumers even, and what are they seeking? What are they going to pull from the industry via those economic signals is very different than pushing pounds into an industry. Hence it's hard to push a rope kind of comment. And I would be remiss if I didn't say we have to have economic incentives, market signals in our industry. And this would span from seed stock all the way to end consumer, thinking innovation very broadly, because it can happen in lots of different places. But regardless of what node in the physical industry we're talking about, we can't expect change in behavior and investment and then meeting those consumer demands unless there are market signals that encourage it. And I spoke at length about that using the E. coli vaccine in the fed cattle space when we were at the Innovation Summit to kind of, motivate that. You guys can pull up this particular, report that's over a decade old. I did with Ted Schroeder if you want more details. But the punchline of this example was we have the scientific ability to do several things, and that's great. In this example, to mitigate some food safety risk in the beef space, but that alone isn't sufficient for them to be implemented. You need to have economic incentives in place for some of our new tools we develop over time to see the light of day and be implemented. And we have to keep that in mind. And I think that's a good reminder of listening to the consumer. That's in many cases where the market opportunity is. That would be the pull for some of these changes in behavior, but it's only going to occur if the market signals follow. And with that, we're going to have Lee give us an overview of the Hogs and Pigs report, and then I'll come back and make a few more demand comments.
Good afternoon, everyone. Before I kick off my commentary of the latest Hog and Pigs report, I'll just pause here briefly to highlight that my comments are based strictly on my opinion of what market forces will cause to happen, and we're looking at publicly available data here as it relates to the latest USDA Hog and Pigs report and other market fundamentals data. Before I get into the numbers of the latest report, I wanted to set the stage and provide a little bit of leading indicators that gave us an idea of what the report would say and maybe some interpretation of the latest estimates. Here I pulled up yesterday's daily slaughter report that provides various numbers looking at the daily report, the week ago, year ago, week to date, and various numbers. I want you to hone in on the year-to-date change in federally inspected hog slaughter, showing that it is down 2.1%. And I pause the question, is it really down 2.1%? And in fact, it is. USDA would not report it otherwise, but I think it's important to understand some other data that relates to how we may interpret our daily slaughter levels. And in particular, the number of slaughter days really matters this year compared to last year, as we've had 2 less slaughter days. So when you look at the daily slaughter up through yesterday, certainly we are seeing slaughter down 2.1%, just over 2 million head fewer slaughtered this year compared to year-to-date last year. But when you compare to apples, either on the daily averages or the weekly report through 38 weeks, we see that in fact slaughter is down just over 1%. So that's important to keep into context. I think as we're comparing to year ago numbers, as well as comparing to what USDA is showing from the last Hog and Pigs report to this particular report. And that is highlighted here. So this is weekly slaughter data. Year to date, as well as comparing to year ago and the 5-year average. As you'll see, the weekly data is down just over 1% or just over 1.1 million head compared to year ago levels. Now, when we look at the actual slaughter since June 1, which was the last Hog and Pigs report we had at the end of June, it said that we should have seen slaughter down about 2.3% or almost 900,000 head. Now, the Hog and Pigs report at the time said that we were going to be down just under a year ago levels, but in fact we've seen actual slaughter down over 2%. So that is a difference of about 860,000 head, giving us an indication that we were going to see some revisions here by USDA to true up the last Hog and Pigs report in June to what actual slaughter is going to be. That has implications for this report as well, because when you think about pre-report expectations, they were basing it on previous reports, and in particular, that last report. So as I highlight some of the differences, keep that in mind, just given we've seen some major revisions based on differences in the Hog and Pigs report prior, as well as the actual slaughter. Now, another thing I'd like to keep in mind too is given those slaughter levels, is there any indication that we are backing hogs up or pulling hogs ahead? I would say in aggregate, we are a pretty current market. Certainly, we've seen producer-owned hogs heavier than a year ago, but overall, they've been just slightly above a year ago at 0.7%. As this spring, we've seen much heavier weights compared to prior year levels. During the summer, it was very similar to 2024 levels. And as of late, we've ticked up on a weight standpoint, but I wouldn't say any indication that backing hogs up. I think there's been a lot of incentive to add weight to hogs, and that's what we're seeing in the producer-owned hogs. Now, on the flip side, when you look at packer-owned hogs, they have been very light throughout the year. Packers have had a lot of incentive to pull on their own supplies, and I think that's highlighted here in the weight data. Now, overall, hog weights have been very similar to a year ago. So any change in production is really related to slaughter levels as opposed to any major change in weights. The other piece of data that I think has gotten a lot of focus this year in particular is looking at weaned pig as well as feeder pig prices. They have run very strong throughout the year. In fact, early weaned pig prices for this time of year are the highest prices ever. These data really, I think, encompass a lot of those leading indicators. I think certainly as you look at the forward curve as it relates to profitability, does incentivize, paying higher and higher prices for these because of the possible profit margins. Also, I think there is some indication that the higher prices being paid is a sign that there is capacity available for these pigs, and also why they are at these relatively strong levels. Now, I will highlight that this is what we would, as economists, kind of consider a residual market. Overall trade in feeder pigs, be it early weaned or 40-pound pigs, is about 5% of the total trade. So I think you always need to keep that into context of analyzing these prices relative to the broader market conditions. Now, as we get into the Hog and Pigs report data, I've been liking to highlight over the last couple of quarters the response rate. So thanking the roughly 2,800 producers for responding to the latest survey. We had a response rate of 63%. That's consistent with the prior quarter. And I would say consistent with what we've seen as of late. There was almost 4,500 or so producers surveyed for the report. And again, about 28 responded to give us that 63%. USDA in the latest ASB post-report slides provided this, and I thought it was interesting to share. So over the whole hog sample here, the roughly 4,500 producers that were surveyed, this was the survey sample size by individual state. So it shows you the producers that were surveyed in those states. Obviously, focus is on the largest hog producing states, be it, in particular, Iowa and Minnesota would be the darkest shade there. But other Midwest, be it Eastern Corn Belt, Western Corn Belt states are some of the highest surveyed states. Again, thanking the producers that responded to the most recent survey. Now, when you look at the report, again, we need to take into consideration the latest revisions, relatively large revisions, again, to true up actual slaughter with what the projections were given inventory levels last slaughter. The March all hogs and pigs number was revised down by about 1%. That's 750,000 hogs. That was all in the market hog inventory category. The last report in June, we've seen a revision of, again, about 1.9%. Most of that was in market hog, but we did see a downward revision of the breeding herd to kind of, I think, true that up with where those farrowing numbers came to be for June and August. And we also seen some revisions to the overall pig crops, which have implications for those slaughter levels that we've seen and will continue to see here. The December-February pig crop was revised down over 2%, all in the sows farrowing category. And the March-May pig crop of this last year was revised down 1.8%, again, all in the sows farrowing category. These are the latest estimates from the Hog and Pigs report. Instead of going through each individual number, I'm going to really help you set up this table here to interpret the numbers. You may note the blue, and there's a lot of blue in this report. Anytime a number is different than what the pre-report analysts had for expectation, there was 7 analysts that provided estimates prior to the report. On average, you'll see where those estimates were in the pre-report estimate category. And most numbers came in below and largely below where those pre-report estimates were. Now, I would argue some of that is because due to the revisions that were made, but overall, we did see tighter numbers than where the pre-report estimates were. Now, in particular, I think you have to point to the market hog inventory was 1.7 percentage point smaller than where the pre-report expectations were. Overall, USDA expects market hog inventories to be down 1.2%. But importantly, I think it's important to look at where the reduction is expected to be. In that 180 pounds and over, they expect that to be up 0.3%. If we look at slaughter since September 1, it's been up about 0.1%. So very, very close to where USDA was at for that inventory estimate. Now we have roughly 3 weeks to go of the slaughter levels for that 180 pounds and over. On the far right column there, you'll see the approximate slaughter timing of each of those inventory categories. And so far I would gauge, the accuracy of that 180 pounds and over to be relatively close. We'll see what the next 3 weeks do for slaughter to deviate from where USDA projected that. Next, the 120 to 179 pound category, that would be mid-October to mid-November slaughter. Similarly, USDA expects that up above year-ago levels slightly. But then I think we see the big deviation from pre-report expectations as well as deviations from a year ago, where slaughter from roughly mid-November through February is expected to be down between 2 and 2.5%. Based on where the USDA numbers are. That is well below where analysts had it. They had expectations that we'd see slightly larger slaughter levels. Now, where did that in particular, first quarter of 2026 lower slaughter level come from? Well, that is the most recent pig crop we had from June to August, where the pig crop USDA showed down 2.6%. That is all comes from a reduction in the number of sows farrowed, because in June, August, we've seen, continuation of litter rates that are roughly about 1% above a year ago. That's a record litter rate for the particular quarter. It started to kind of, I would argue, increase at a decreasing rate, but we're still seeing, continued productivity increases there from litter rates. I think the big question for me in this latest report is really the sows farrowed. We did see, those sows farrowed numbers much lower than a year ago, and especially as the September, November farrowing intentions, would be much lower than the prior year. Now, the breeding herd was down 1.8%. I think, that is even still a little bit high given where those farrowing numbers are. And so I'm going to walk through a few comments about these individual numbers to provide a little bit of context on some of them. Before I do that, though, I wanted to highlight, so this is a survey-based report, and importantly, and this is one of the last charts that USDA has on the report, is they provide the reliability of the quarterly hog and pigs estimates. I think it's always important to keep in mind that any estimates that are based on survey data have a statistical error. And we should credit USDA in really giving us the report card here of that error based on where the hog and pigs report numbers from the first estimate to the last estimate have been. And they provide a root mean square error and a 90% confidence interval. And I walked through some of the math there to kind of show you what that means to particular estimates. So as we look at the pig crop in particular, I mean, we could see some variation from roughly about 600,000 head to over 1 million head. and be within kind of the statistical margin of error that USDA provides, and would still be kind of within their accuracy of the report, given what they're providing here from a reliability. Now, importantly, too, if you look at this report, the difference between the first and the last estimate, on average, about half the time they've been below and half the time they've been above. And so, again, there's really no bias one way or the other. There is the need for revisions over time. But again, I think the accuracy of these reports over the long run has been pretty good. I just wanted to provide a bit of context of the variability we could see in these numbers. There's been a lot of discussion about the breeding herd. We've seen a breeding herd that's really been plus or minus 6 million head. And the latest one came in just below that 6 million head number at 5.934 million head. That is over 100,000 head smaller than a year ago, or just under 2% smaller than a year ago. And it is the smallest September 1 breeding herd since 2014. And you see that really highlighted on this chart, where we've kind of precipitously come down from the height that we've seen in 2020 at right around 6.5 million head. Now, the questions about the breeding herd have been, would we start to see some increases in the breeding herd? Because from one indicator is sow slaughter has been down just under 6% year to date. And you'll see the quarterly estimates here where sow slaughter, again, has been down between 30 and 40,000 head per quarter compared to a year ago level. Now, the one thing I'll kind of remind you when you're looking at slaughter levels is you need to keep into consideration the base level. So we have fewer sows today than we did a year ago. So if you consider anything like a similar culling rate, you'd expect fewer sows to be available just because the base is smaller. And I think that's part of the contribution here as you look at a breeding herd that is smaller, but also sow slaughter that is smaller. It's because of that, the mathematical relationships when you look at the culling rate relative to what the base number is. Also, part of that reduction in sow slaughter has been that as we look at the data from Canada, sow and boar imports for slaughter have been down just over 12%, or roughly about 30,000 head. So part of that reduction is just due to fewer imports year over year from Canada being available for slaughter. Now, overall, we've seen live hog imports from Canada up about 1.5%, but that's solely been in the feeder pig category, where we've seen those up 8% so far year to date. The farrowing intentions, as I mentioned, is probably one of the more interesting numbers in this report as it relates to not only the breeding herd, but just the level of those farrowing numbers and farrowing intentions. The sows farrowed in June and August. We brought down almost 91,000 sows fewer than what producers told USDA back in June. I think that's interesting given, we've looked at a forward curve that has continued to improve and remain some longevity as we look out further and further. We've seen some profitability levels. So the fact that we've seen, fewer sows farrowed, brings into question a little bit of that, as well as, we've seen a breeding herd that's gotten a little bit smaller. That certainly does align with the fewer sows farrowed. Now, as we look at September and November, those intentions also were reduced from the last report, about 91,000 sows. These would be the smallest sows farrowing for September, November, and December and February since 2013 or 2013-14 for the December-February category. Now, where I could potentially see some revisions to the next report is to either that breeding herd or the sows farrowing. And why I say that is if you look at the breeding herd utilization, it's certainly within the bounds of what we've seen historically, but it is definitely on the low side. So as you look at the September, November sows farrowing intentions, compare that to the September 1 breeding herd, you have a utilization level of just over 48%. Now, the 10-year average is over 49%. And so if we do see some changes here in the next report, producers could tell USDA that they actually did farrow a few more sows than they said they intended to in the latest report. So when the actual sows farrowing come out in December, we could see that number a little bit larger. Or we could see a further reduction, revision down of the breeding herd, which would also increase that farrowing rate, all else equal. Now, I think we need to question maybe what is possibly impacting that lower farrowing rate, and saying maybe it is more accurate in the terms of the recent conditions. And I think one factor that could be driving a somewhat lower farrowing rate is when we look at disease incidents, and here in particular, here I pull up the Iowa State University swine disease reporting system, the dashboards that they have available, and I select PRRS in 2025 and the latest estimates for September. We see some similar relationships. If I look at the last couple of months, we see that PRRS incidence here has been above 3 standard deviations above the baseline. And in particular, if you look at the adult or sow farm cases, it's been the most red on this graph, right? So it's the most states have above that 3 standard deviation above the baseline. So I think, again, that's one possible explanation as we look at a reduced farrowing rate. It could be because some of the disease incidents, particularly on adult sow farms, that is occurring. The wild card continues to be pigs saved per litter. Here we see a 0.9% increase year over year. That continues to set records by quarters, although the reduction now or the increase has been more in that 1% increase range. But I'll remind us that, again, these are still at record levels. Continuing to beat records is more and more difficult. I always give you the example of if you're running a race, right? To beat the records, you can do everything right, but a lot of times the conditions around you have to be perfect as well. What this data tells us is, on average, those conditions still continue to be good out there. Now, for individual operations, I think we've certainly seen some variability from a productivity, be it pig saved per litter or sows farrowing. But on average, we're seeing, continued increases in productivity. USDA's latest estimates for pork production, I think for 2025, do align with the current report that USDA has. Now, part of the reason is we have a lot of that production behind us already, as we're really only kind of forecasting here the fourth quarter of the year. USDA has a production forecast of down 0.8% versus 2024. I think this report, if anything, highlights that we will see reductions in that 2026 production forecast, which USDA currently has up 2.9%. Even before this report, I think there was some indication that we would see that production forecast be whittled down in the coming quarters. That likely is to occur a little bit quicker now, given where the latest Hog and Pigs report numbers are at. For the last few minutes, I'd like to just highlight kind of some broader, economic conditions as it relates to prices and costs. These are before the report. So any price, action would be after this report. These prices would be as of or before the latest Hog and Pigs report. Forecast for 2025, a little bit of variability, but roughly on average, as I look at a composite forecast, would be about 10% higher prices for lean hogs. Most of that occurred in the first and what would be the third quarter of here 2025, with the third quarter being forecast roughly about 17% higher. The fourth quarter, again, a little bit of variability there, but we're forecasting, I think, anywhere between 5 and 10% or so increase in prices compared to a year ago. These will be some of the highest prices we've seen nominally, before we adjust for inflation, just rivaling maybe just under the prices we've seen there in 2022. Now, 2026 current forecast would be for about a 4% reduction, about a $90 per hundredweight average if I look across the composite forecast. Again, these prices and price forecasts would be before the release of the latest Hog and Pigs report. Our current cost of production from an annualized standpoint is about $83 per carcass hundredweight. That's a reduction of about 3% from 2024 levels. I'll highlight though, we're still over 30% higher in 2025 versus 2020 levels. So as you look at the 2025 costs of corn, soybean meal, and distillers grains, those are some of the lowest costs that we've seen from the pork production community. Yet our costs are still, elevated relative to the lows we've seen in the last decade, where we've seen prices in the $64 per carcass hundredweight range. I highlight the difference there because as we look at those commodity ingredient costs, I mean, the debate is, how much lower could those costs go? Our costs of production remain elevated due to all the other inflationary costs that are rather sticky and likely here to stay. So those prices and profits align to roughly about a $20 to $25 per head profit for all of 2025 on average. That ranges from about break even to about a $46 per head profit that we've seen in the recent months. 2026 forecast is currently about a $14 per head profit, but quite a bit of range there, from losses of about $18 per head to profits of about $36 per head. That I mentioned the forward curve a couple times. We look at, overall the strong prices and, stable costs provide the best really forward curve we've seen since 2021. When we forecast out profitability, we're not forecasting losses now until October of 2026, given where current futures prices are and current expectations for cost of production. In my final slide here, I'll highlight kind of the financial health of the industry. And I've shared this slide with you and throughout my presentations to industry to really look at, I think how good certainly we've seen the current economic conditions as we look at 2025 and expectations for 2026. But we need to also reflect on how bad 2023 and early 2024 were. So if you begin the profitability, call it cycle, and continue to sum up profits since 2020, we got down to losses of about $200 per head by March of 2024. Now, it's taken us till now to really get back to break even, given the losses that we've seen in 2023 and 2024. So that tells me that the industry is still kind of in that financial healing phase. And I think that helps support where some of these Hog and Pigs Report numbers are as it reflects to the breeding herd and such, that we haven't seen much growth yet because, again, we're just still healing from the large losses that we've seen in 2023. Now, the forward curve certainly looks positive. And by this time next year, we're kind of back to the level we were kind of August of 2022. So again, conditions look improved going forward. But still, I think, as we've highlighted both the supply and demand situation, there'll be some, some situations, some challenges, but also some opportunities to navigate here going forward. So these will be some fundamental reports they'll maybe change some of the thinking here as we talk about markets over the coming weeks. So thank you.
Well, thank you, Lee. I'm going to push us forward a little bit more on some demand points. Lee alluded to lots of updates, from our various reports, and there definitely are what he and I would call derived demand effects. And I want to clarify what I mean by that is the end user is the primary source of demand. And then those signals work their way back through the industry, right? So back to retailers, to packers, to market hog producers, feeder pig producers, all the way back to seed stock. Those are what we call derived demand signals. And one of the things that wasn't available till recently is kind of a shovel-ready, easy way to quantify the potential benefit from boost in pork demand and what that means for your bottom line on the farm. How we translate pork demand improvement or the flip, it declines into on the farm price impacts. And that's what's in front of you right here is just a kind of a summary of that. So first and foremost, thanks to Ezra Butcher as well as Lee for their more recent work on this. I think it's an excellent resource for the industry, and we're using it. Lee and I highlighted it at the Innovation Summit, and I'm going to put this tool to use here in a few slides. But I want to call your attention to it and encourage you to bring that up in the future. And the punchline is, you as a hog producer do benefit when pork demand, in this case specifically wholesale pork demand, which is the net of domestic, retail, and food service, as well as export, because we send different products through different channels. You definitely benefit on the farm. And this is a recent research resource that helps us quantify that. And I get asked, Lee gets asked, what drives consumer purchasing? What drives their interest or lack of interest in a particular pork product? One of the things we try to qualify in our remarks at the Innovation Summit is, that's not just a big question, and the term $1,000,000 question actually doesn't apply. I want to highlight to you here briefly, it truly is a multi-million-dollar question, and therefore one we need to care about. And to frame this, I'm going to pick on the pork loin. We could pick on different examples. I'll remind our group here, Kiersten gave us an overview of undervalued, underdeveloped parts of the carcass. The loin was on that list. There's been targeted efforts on the pork loin for quite some time. I don't want to pick on my own grandmother, but I'll do a little bit here just to make the point, is a lot of folks in the US today, when they think of pork loin, they jump to kind of a traditional use of that in a roast, a very quote unquote big chunk of meat. I may or may not know what to do with it. Or even if I do, I don't want to do it the way that I grew up doing it. It can be kind of a boring discussion. It doesn't have to be that way at all. But I want to kind of highlight, I think some of the challenges in the loin space stem from that. And there are a lot of innovations and recipes and different uses of those products that have been talked about. And there's a couple examples here, but I want to spend a little bit of my time telling you kind of what that might be worth. And to do that, I'm in the middle of some work, again, for the pork board that'll be highlighted in about a month, that's trying to understand price sensitivity differences across markets. What's the impact of changes in certain categories on pork price, and ultimately help us understand pork demand in a more narrow way. And one of the things that comes from that is access to some aggregate data on the loin complex. What I want you to take from the numbers in front of you here is over the last 4 complete years, so of course 2024 is the last complete calendar year, we've had a decline in aggregate retail loin volume compared to the year before. Without any geeky economic model, if demand was flat and we reduced the volume, we would expect the loin price to go up when you're taking pounds off the market. But that only occurred in one of those 4 years, hence the green boxes in front of you. And I can do some fancy math about what I might expect that price quantity trade-off to be, to tell you what I would have expected the price increase to be, given the volume reduction, if there wasn't a loin demand increase. That's what the purple numbers are here. And it allows me to ultimately say, unfortunately, in all 4 of these calendar years compared to the year before, loin demand in aggregate through the retail channel declined compared to the year before. The 2023 number that was there was this price increase of 4.1% was needed. And I want to interpret that for you. You'll see here in parentheses this demand neutrality comment. The punchline here to start with would be, if in 2023, the wholesale loin price, so think the primal as reported by USDA, was 4.1% higher in 2023 than what actually occurred, then I'd be sitting in front of you saying in 2023, loin demand was the same as it was in 2022. That, of course, was not the case, but we can use that, kind of after the fact example to say, so what? What's the value of this? Okay. So the so what would be is, if that loin price was 4.1% higher, that would correspond with a little bit more than a 1% increase in the composite cutout, because the loin is a large portion. It's 25% of the total cutout. Using Ezra and Lee's work, we can go further and say, how would that translate into on the farm prices? And you can see here, for example, it would translate into a 0.8% increase in feeder pig prices, 0.5% increase in lean pig prices, and almost a 0.5% increase in market hog prices. You might say, oh, gee, Glynn, 0.5%, that doesn't sound like a lot, but I want to give you some context, hence the bottom number here, that actually corresponds with $100 million in the case of 2023. And that's because this industry is pretty large. Commercial slaughter in 2023 was nearly 128 million. Dressed weights over 200 pounds, right? 214 and an average price. When I use all those coupled up with that 0.5% increase, leads me, that's just straight math, into that $100 million, what it's worth if I sell market hogs if we simply would have accomplished loin being neutral in demand in 2023. How you do that is up for debate. Lots of discussion on that was sort of the motivation for our Innovation Summit and a lot of related efforts. There's lots of discussion you can talk about there, but I just simply want to give you kind of a concrete example. This is not a small, right, thing we're talking about. If you simply avoided a decline in loin demand, it was a big deal, much less if we can grow it going forward. And I'll kick it back to Kiersten.
Thank you, Lee and Glynn. As we think about bringing this all together, I want to talk a little bit about National Pork Board's role in this conversation, in these partnerships that we've established, and in how we're going to bring innovation forward. We'll work as a catalyst in accelerating the category growth. And really, it comes down to we want to drive volume, derive value, and keep pork relevant. So we have thought about key stakeholders, and on the next slide, you'll see that we are taking into consideration, you, the producer, and the role that innovation plays in solidifying your future and the future growth of the pork industry. We've been bringing packers, retailers, food service operators into the conversation and talking about the goals they have for their individual businesses and what they're trying to achieve and the role that innovation can play there. And we're certainly thinking about the consumer, where they are, how they're consuming protein, how they think about and interact with meat and pork specifically. So our role will make it clear what the opportunity is, and we'll make sure that we bring value to each stakeholder. So with that, innovation and the conversation around innovation is just getting started. And we look forward to working across all of these key stakeholders to help iterate on the opportunity for pork, moving it from today into the future. What might be helpful is one parting thought from each of our panelists. Glynn, I'll start with you. Any thoughts on this topic of innovation or anything that you would like to share with producers from this past week and the industry leaders that came together to discuss the future?
Yeah, maybe a kind of a broad reaction to put a bow on a little bit is protein is having a moment in our society. And, that's broader than meat protein, but meat protein is certainly there. So, Lee and I shared examples like cottage cheese and other products that you're probably familiar with. I'm starting my kind of summary comment with that is the timing might be right for this discussion to kind of seize that. Lots of folks in our society are seeking more and additional sources of protein. And that makes it an exciting thing. Like the timing of this feels right for the discussion is the point. But the mentality of how the industry approaches that, it's got to be more than just the timing is right. I had the grow the pie image of a book in my slides earlier. I would encourage the industry to have a focus on what's the aggregate consumer demand opportunity. How do we grow the economic pie of this industry, seizing upon that? And there's ways to do that, but it starts there. And then we sort of figure out how and so forth. But, recognize that macro trend of protein is in, hopefully will be encouraging and sort of add some steam to this effort. And I hope those that have joined us here today agree with that.
Thank you for that. Lee, any thoughts from your time with us this week?
Yeah, and I think, important and exactly what we did here today is appreciate both the fundamentals as it relates to the demand side, as we focus on innovation and consumer demand, but also understanding the supply side of the equation as well. And so again, USDA gave us their latest update of those supply numbers, right? And we'll see those supply numbers here play out in the coming days and weeks and months, as it relates to that report. And we may or may not see some kind of deviations from those expectations. One thing I continue to highlight is even though we are seeing a smaller breeding herd and maybe some tighter supplies than year ago levels, this remains really the youngest and most productive probably sow herd we've ever had. And so as we talk about innovation from a production or producer standpoint, that continues. That Glynn showed that graph of you have the number of sows decline, number of sows per person decline, but you continue to see pork production increase. That is going to continue, right? And there, the innovation on the supply side of things will continue forward. And so I think it's really just kind of marrying, as analysts, we marry the supply and demand kind of situation to understand where those equilibrium prices are. And I think that's always important to keep in mind in kind of the broader business decisions is, these markets are very dynamic, and we kind of have both those sides coming at us.
Yeah, thank you for that. Well, we are at time. I want to thank you, Lee, and you, Glynn, for joining us today. On behalf of all of the staff at the National Pork Board and our board of directors, please know that we're working tirelessly to continue to build trust and add value in quality and safe product you produce. And I look forward to working with you and for you. Scan the QR code on the screen to stay up to date on pork checkoff through our weekly email. Again, thank you everyone for joining us today.